Anybody can trade this stuff. As always, I'm going to start with the higher time frame draws on liquidity. Coming into New York 9:30 opening bell, I am looking at Friday's high getting tagged. Okay, that's going to be my first point of interest, that first draw on liquidity. Next, we have draws on liquidity at London low. The next draw on liquidity is going to be Asia. And then below that is going to be Friday, New York PM low. I'm looking for these open draws on liquidity. I don't come into the market with a predetermined daily bias. That's very dangerous. I don't do that. I'm just simply waiting for a key area to get swept. And then we're looking for a reversal model into the opposite draws on liquidity, right? We end up getting a nice sweep of the Friday high. As you can see on this manipulation leg up here into Friday high, we leave behind a 5-minute bullish fair value gap. With this model, what we're doing and looking for is now a 5-minute inverse fair value gap. If we want to see price invert this fair value gap right here, and we get a very nice inverse fair value gap. All we have to do is wait for this market to come back up into this 5-minute inverse and then see how it reacts there. I'm not going to just blindly short it. Taps into the 5-minute inverse, into the 1 minute. Okay. Now look how this market just boom manipulates into that gap. You love to see that. Here's where things start getting interesting. On this manipulation leg up into the 5-minute, we're leaving behind a 1-minute bullish FVG. So now this is what we're waiting for here is a 1-minute inverse to confirm that 5-minute inverse being a strong level of resistance for us to spool this market down in the opposite direction. Okay. So here we go. Boom. Inverse. Entries right here. Stops are going to be above this manipulation wick high into the 5-minute inverse. Targets are going to be down at London low, Asia low, New York PM, Friday low. Now this market does come back up into that inverse, back up to the old 5-minute inverse, retest that as structure, and then we start to chop our way back down to the overall draw on liquidity, which is London low, Asia low. There's a lot of framework that goes into this. Friday high getting swept, V-shaped recovery, 5-minute inverse, a nice displacement through, a retest of that 5-minute, then a 1-minute inverse, and the market ends up displacing and sending out to a full TP. Love trading inverse fair value gaps off of a liquidity pool like this. One of my favorite trades to take